Attention A1 Trading Show fans, if you're interested in getting free access to the Edge Finder or our premium trade alerts, listen up. For a limited time, our show's partnered broker 8cap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to 8cap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now back to the A1 Trading Show.
All right. Good morning, everybody. Welcome back to another live stream. Hope you're doing well and happy Monday to you. One thing that traders love is Monday morning because the markets are back open. There's, not as much to do on the weekends if you're as obsessed with markets as some of us. We got some interesting stuff to talk about. There's a lot going on here to kick off the week. And this is a big week. Next 2 weeks are likely to be very eventful in the financial markets. You've got a lot of stuff happening. This Friday, we've got the jobs report, which will be really important to see what happens with the labor world. Are things going to stay, solid or strong enough as the Fed continues to look to cut rates? Or is there a bigger slowdown coming? That's the big question. I mean, taking a look at the markets here this morning, we've got the NASDAQ up. We've got the dollar about flat here today. Gold's down a little bit and oil's down a ton. I want to talk about that because, of course, this has a lot to do with the latest developments in the Middle Eastern situation, right, between Israel, Iran, Hamas, all of the stuff that's going on in that part of the world. Seems like there was some potentially good news, and that good news has oil prices down by 6.3%. Now, if this continues, guys, one positive is that, number one most positive thing is let's hope that there's some sort of peaceful resolution and that, things progress in a constructive way rather than a loss of life way in the Middle East. That's the number one thing. The number two thing is that this could help with the overall kind of story of inflation. And the number of three thing, for some people might be the number one thing, is that the gas pump is likely to be pretty cheap. Now, what we've got here is we've got oil prices West Texas oil WTI is trading at 67.9, which is a fresh low here out of the last month or so. It's been a real nice kind of choppy market here recently. That being said, watch oil today because this is a really important market. Just like the dollar is really important, oil is also very important. If you're somebody who's like bullish on indices, for example, falling oil prices off of geopolitical conflicts cooling off is a largely good thing, right? Because what that could mean is inflation comes down and terrifying, scary stuff in the Middle East is obviously not good from both a humanitarian standpoint as well as a stock market perspective. So oil prices down here this morning, 6.2%. That is a big slide. In fact, that's one of the biggest, down days that we've had. Over here, you had 4.5. You had over here just under 4. Today, you're getting a drop of 6.2% the price of oil. Yeah, I mean, ZS Swift says, now the good news is that they didn't target oil and energy stuff. So yes, but arguably, even though that's not necessarily saying, oh, there's peace in the Middle East now, that's not what I'm saying. What I'm saying is that if there's not like a worse than expected outcome, like they target more critical things that could lead to much, more devastating stuff. Arguably it's a de-escalation rather than an escalation event. And if you're, an oil trader, then very well, escalation in war stuff has the tendency to cause oil prices to pop, and de-escalation or any less than expected stuff is going to be, it's going to cause the price of oil to drop. So oil's down big today. That's also leading part of the reason I think that the market is seeing a pop in the NASDAQ, the Dow Jones, the S&P 500. All of the indices are up here this morning. And the other thing is Bitcoin's up 1.5%, and I'm long Bitcoin, so this is awesome. I've got a nice little position running here. I've trimmed my stop loss, and I've got this one running off of the daily chart, although the initial entry was a entry off of the 4-hour chart. You can see right here, this is where I initially got into the trade. Price pulled back into this area, hit support, and actually came back and retested it a second time. But I am looking for an opportunity here this week. If we can see this thing start to take out through the highs, I'm going to look for an opportunity to start trailing the stop loss further into profits, which is always a good spot to be at. Other trades that I'm in, euro not as good. I'm short on the euro off of the 4-hour chart. We had a nice slide on Friday, and now prices come back to about break even. So my euro short is, we'll see where this goes. We'll see if I hold on to it. Still have my stop loss above this level of resistance. If markets, shoot higher here, if the dollar drops hard or something, then I will definitely be, taking a loss on that if needed. Nick's lagging a lot. Are we good now? Thank you very much, producers, for that. Let me know if screen starts lagging again. I think the euro has bottomed. Certainly could. I like the momentum here to the downside. And, although this is it's not pulled back much on the daily chart, I am looking for momentum to continue. Price pulled back into this resistance on the 4-hour chart. It very well could start bottoming out. If you start to see a breakage of this, right? If you start to see higher highs, higher lows, then perhaps buyers have found a low. But in my opinion, when we take a look at the dollar index, you had a really impressive end of week last week. You had a huge move up on the dollar, pulled back into this area, confirmed it on Friday. And we'll see. I mean, if you do get a big red candle that closes back underneath, then my idea is probably wrong. But I would not be surprised, as we've got the election as sort of a bullish catalyst for the dollar right now. Wouldn't be surprised if we do see this thing continue to just kind of chug along and go higher. So we'll see. I have a small position on it. If it doesn't work out, it doesn't work out. Gold is down here today for a number of reasons, but the biggest one is obviously the Middle East is a question for gold, and when that question is more questionable, more scary, gold typically rallies. But with the news that came out over this weekend, we did see an initial drop on gold prices, and they've sort of leveled off since then. They're down from where they were Friday, but they're up from the lows that we put in on the Sunday session. Stock market just opened up. Take a look here at the 15-minute chart for a second on the NASDAQ, SP500. Bit of an out-of-the-gate selling here so far. Russell's also up almost 1% here today. Russell index is, of course, small cap companies. It's something I track a lot. US 30, NAS, S&P. Let's see how NAS opens up here. You can see here's the Sunday gap that occurred on the NASDAQ. Big gap up, probably because of the whole, oil prices dropping on good news in the Middle East. We'll see. That's a pretty aggressive opening candle. We'll see if buyers come in here or if this continues to. There's a possibility that I'd watch this level right here on the NAS. If we come down to that area, could get a bounce, but if you start to fade this area, right, then there's a possibility that we get the gap close. So anytime you see gaps in the markets, there's a couple of things you gotta consider. I believe this is called the gap window. That's the standard phrasing for it. This is the gap, right? So this is where we closed. We popped open above those levels. And what you want to look for here, what I'm going to look for is this. If it comes down to this area, how does price react? Do you get a nice pop off of those lows? And we just continue, start taking out highs. Or if you start to see support fail here, right? You come down to this level and we don't see the pop. We in fact see, on perhaps like the 15-minute chart or the 30-minute chart or something, you get a failure to hold that level of support, which this is generally considered a level of support. The gap open spot is a level of support. You want to see that thing hold. If you don't see it hold, oftentimes what will happen then is that the gap that was left open in the market gets filled. That's a bit of a technical analysis kind of insight that I've, you just see it happen so frequently. You don't usually get Sunday gaps, but when you get big news over the weekend, that's very, very frequently what happens is you get big gap and the market either tests it and rallies from that, or it tests it, fails there, and then the market says, okay, we're going to test all this area again. You can call it liquidity, you can call it whatever you want to call it. Doesn't really matter. It's just a gap. And the market sometimes will go back to test that gap. Not always. Sometimes people make the mistake of thinking the market always goes back to fill the gaps. No, it doesn't. It does not. There are instances where it may run for 3 weeks before filling the gap. There are other times where it runs for 6 months and then a year and then 10 years and it never fills the gap, right? There's not a certainty that gaps get filled. Don't let that. You get these, there's so many little monikers and things that traders make up. Gaps don't have to fill. What I'd say is watch how price reacts when you get to this level. And if it fails to hold that level as support, there's a large chance, in my opinion, you would see that fill. Does that make sense? Hopefully it does. There's traders out there who trade gaps day in, day out. For Forex traders and futures traders, there's not that many gaps. If you're a stock trader, there's gaps all the time. In fact, a lot of people love to trade stocks because there is gaps. It's actually a very interesting strategy. Let's take a look at like Apple, right? Yes, you can trade Apple. Like if you're looking at Apple and you're looking for big gaps, you can see here's an example of exactly what I said not working out, right? Price came down, failed, and then it never filled the gap. So that is a bad example. But then let's take a look here. You can see this is a gap open, kept going lower, eventually filled the gap. Let's see what else we can get. Let's look for some obvious gaps. Here's one where it gapped down, right? Never came back to fill the gap for a while to the downside. Let's do one more gap just for fun. Here's one, gapped open, ran, never came back. I mean, it did come back, but look at this. This is a perfect example. Look at this. Big gap open. We came back and retested the gap window, I believe is what you call that. Support was found. Market rallied. See that? So something to keep an eye on. So we'll watch to see if the NASDAQ comes down and tests that 20,430 level today or not. I am bullish on the NAS. I'm bullish on indices in general. I do think we are headed to fresh highs on the NASDAQ. Path of least resistance, in my opinion, is to the upside here. Until you get something to change, the story looks really good. When we take a look at the Edge Finder's top setups page, we've got NASDAQ on top. Love to see it. NASDAQ, USD CAD, Bitcoin, dollar yen getting bullish readings. We got a lot of stuff to look at this week. This week is going to be busy. We got, let's see, what else do we have? On the sell side, we got euro dollar, very bearish. Love to see this as I'm already in a short position on the euro dollar. Kiwi dollar, euro pound getting some bearish readings. I'm already long Bitcoin. I have some exposure to SMH, which is a semiconductor ETF, which is, you know, the NASDAQ is heavily made up of semiconductors as well as other tech names. S&P500 is giving us a bullish reading. Dow Jones is more on the neutral side. Dollar yen is one that I want to look at. And the DAX getting a very bullish reading as well. We got some good readings here on the Edge Finder today. Speaking of this, I got a little bit of announcement here for everybody who's watching. We got 426 people here. The Edge Finder this week, we are doing a free week for the Edge Finder, which is exciting. And so here's what we'll do here. The Edge Finder free week, I want to be careful how I say this because people always don't listen and then they get angry. Here's how you get access to the Edge Finder free week. It is not one free week for you whenever you start. It is this week only. The Edge Finder is available for free. Here's how you can get some information. We're going to drop a link here in the chat to where you can fill out an application form to try out the Edge Finder this week for free. On Friday of this week, it doesn't matter if you sign up Thursday or Friday morning. It is ending on Friday. For everyone, it ends on Friday. You guys who are watching with me live right now, you get the first dibs here. Take advantage of the Edge Finder free week. It's been dropped here in the chat. All you have to do is fill out that form, and someone from our support team, make sure you fill out proper information because we're going to be contacting you to give you information and make sure that if you have any questions during your free trial, you can do that here. We do not usually offer free trials. This is a very rare thing. We do not usually offer them for free. Usually trials are $199 to try it for 30 days. This week, however, for a very limited time, you guys can try it out. Now, I do want to ask a favor. If you do take advantage of this free week, people take free stuff for granted all the time. Everybody's a cheapie. Nobody wants to spend any money. I get it. But I'm asking a favor. If you are a regular viewer of the channel, if you are a fan of what we do here, take this very seriously. Do your due diligence on the tool. Practice with it. Learn how it functions. Read through the website guide. We have a free course that's also available for the Edge Finder. I want to ask a favor from you. I'm giving you a free week of the Edge Finder. I want to ask a favor in return. If you apply for it, make sure you, number one, enter your correct info so that we can actually send you a copy. You have to send us the right info in order for us to send you a copy of the Edge Finder. Number one. Number two, I'm asking that you actually genuinely try the tool. And if you like it, that you purchase it afterwards. I mean, you don't have to. You can take advantage of the free week. There's no strings attached. But I'm telling you, we have traders all over the world, thousands of people who use the Edge Finder for a reason. It is a remarkable tool. It will allow you to scan fundamental analysis like you've never done before. It will also show you top setups being generated based on the economic data. It is a really powerful software that we have worked our butts off to build. If you want a copy this week, it is free. It's not free forever. I have to say it over and over so people don't get confused. It is free until Friday. At Friday's day, during the day, it will be shut off. Free access will no longer be there. My one request is that if you try it this week, that you take it seriously. And if you like it, you purchase it and support our work. All right, there you go. Let's take a look at some stuff here. I am currently long Bitcoin. I mentioned that. Bitcoin's flying. I don't know if you guys saw this, but we got a good runner here on Bitcoin. I am watching this because if it takes out these highs, I'm going to look to trail stops. So I'm trailing stops based off the 4-hour chart. So if we get something like this, if we get a big break through the highs on Bitcoin, I'd love to see it. What I'll do is I'll look to trim my stop loss or trail my stop loss into profit. Depends what the chart looks like at that time. If you get something like this, I'd look to take that stop loss and move it up to this range. I'm seeing some thank yous for the free week, guys. Yeah, no problem. Try it out. Again, that's all I ask. Take it seriously. If you're going to try it for a week, people, here's the thing. People take free stuff for granted to a massive degree, right? When we drop like a free course, for example, people are like, oh, great. And then they never open it, right? Free. The great thing about free is it makes it so that people can try it who are actually genuinely serious. But a lot of times people who are the free people are not, very serious. So don't be one of them. If you're going to try it for free, that's great, but make sure you're serious and that you're actually going to give it a real honest try to see what the tool's like. Russell's up 1.6%. Seems like it's finding support right around here. I'd love to see the Russell. I have a Russell growth ETF that I'm long. Got a stop loss. I probably need I definitely need a trail stops on this one. Let me see. Got a 4-hour chart breaking through the highs here. Definitely going to trail stops on this right now. So let me go ahead and do that. And I'm going to go ahead and actually send a updated message to members with this. Put in this higher low, nice little push off of support. And just get this nice and primed up. Okay. I'm going to share a screenshot and update with members on this one. Okay, let's see. Where's my... All right. Okay. My entry was unchanged, but then 375.29, 375.29 is where stop loss trailed into profit. Nice rally off of 4-hour support, taking out the highs, trailing stops just below swing low here. Everything looks good and good to go. Okay. If you're in the group that is under the ETF trade section, I do trade, of course, Forex, commodities, indices, stocks, options, ETFs, etc. But this is a trade that I had on for the last couple weeks here. It's kind of been sitting in the background, but seems to be waking up, which is awesome. Small caps having a nice rally today. We will definitely take that. Love to see this thing, just explode higher for the Russell. NASDAQ coming down a little bit, giving back a little bit of the gains here. And so far, We'll see how that ends up today, if it's going to kind of bottom out and rally or not. Dollar index was up a little bit more, came down here in the last couple hours. Probably helping out gold a little bit, which is making a push, it seems, back to try and test those highs. We'll see. Gold's price action is just still very, very bullish. Really hard to fight this one. Is the Edge Finder a monthly fee? Nope. Thank you to the support team for this. The Edge Finder is a one-time payment. You can send us a direct message here. Yeah, it's a one-time payment. And as I mentioned, the Edge Finder free week starts now, ends Friday. If you do not already have access to it, you can sign up for the Edge Finder free week. We'll drop that link one more time here in the chat. It is 1 week ending Friday for everyone to get access to the tool, try it out, play around with all of our different labor statistics, economic data, COT data scans, smart money indicators, top setups page, everything all in one spot. So take advantage of it. It is free until Friday. All you have to do is fill out that form, and we will contact you with whatever you provide to us to send you a copy. Okay, guys, we're going to take a quick break, and then Ivan is taking on the show here today, which is awesome. We'll hear from him. I'm going to jump off so I can get started helping with everybody on the trials list. We got a million people who are going to fill out that form today, so going to be busy. Please, by the way, if you did apply for an Edge Finder free week, please be patient with us. It will take us some time. We go through these manually, and we contact everyone, and we speak with everyone. We got 3 people who are going to be doing it today, but please be patient with us as we work that out. Okay, quick break, guys, and then Ivan is taking over the show. Stay tuned. We'll be right back. You know, this Edge Finder thing is pretty cool. I can trade it all sorts of different ways, and for me, I like using fundamental analysis and macroeconomic data to try and make better decisions. What do you like to use it for?
I'm more of a proponent for the COT data or the business forecast tool.
Did your tooth just fall out?
It was my baby tooth. It'll come back. Hey, at least I don't burst into flames when I step out into the sun.
Trading without the Edge Finder can be scary. The Edge Finder keeps you up to date with all the most important market-moving information. Check out the latest COT data, retail sentiment, fundamental data, and so much more. This week only, you can have 100% free access to the Edge Finder. But don't wait. This offer is available for this week only. If you want access to COT data, top setups, and so much more, click the link being dropped in the chat now to sign up. Again, this is 100% free access to the Edge Finder, available this week only, so don't wait or it'll be too late.
Welcome to the, what do you call it, Halloween party over at EvanFX, because it is another stop loss announcement. You're welcome. Boom. Sold the Euro New Zealand at 179, has stop loss at 80.50, about there, and got stopped out at Thursday, Friday or so. Well, sorry, I'm never going to be a good trader ever, so you're welcome. Anyways, we have election in 1 week and 1 day. I had a meeting earlier with the with the VIP group. Talked about psychology, talked about how to become a better trader, how to prepare for the election, how you as a trader are supposed to win as a trader, not necessarily pips and money, but as a trader, following a process, doing what you're supposed to be doing. That's kind of my deal. So, as you see, my name here is Ivan. I am a mentor here. I'm supposed to help you guys become better traders. I'm supposed to make you feel good about yourself, and by the end of the day, kick you out, not kick you out, but tell you to don't trade when you are too emotional, because emotional trades are the worst thing not the worst thing I know in my life, but I hate it. So my theory was S&P 500 should be about there now. We are not. That's about that. I don't have any other plans other than Armageddon next week. What can I say? I've done this for about 10 years now. I've been about through 2 elections now. And if there's one thing that is just as certain as Christmas as Christmas coming every year, and the housewife getting stressed every year, is that we're gonna have volatility, and that volatility is kind of what I hope for. Is gonna set myself into a trade somewhere around 5.5, but there is that. So that's a long game. On the other side is I've waited for dollar bearish for quite a while. Now, why do you say so, sir? I believe because of lack of inflation. Now, GDP is too high and NFP is on Friday. So maybe labor market is too high. And Donald Trump is likely to win. That has fueled the dollar and also fueled the 10-year and a 2-year T-note, because inflation expectations coming in, blah, 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 blah. So I have not traded for a long time here because, I think this should go higher. If we break 108.40 tomorrow, today, or whatever day that is, I'll probably look for a pullback. Am I going to be worried about the election? Yes, I am. Am I going to bother? No. Am I going to stop that? Yes. Am I still going to do it? Yes, sir. Why am I talking like that is annoying? I'm sorry. Let me speak differently. What up, people? How are you today? Today we talk about yen bears. I don't know what's going on there, but yeah, I don't know. How else am I supposed to speak? Like that's so personal. Okay, how do you want me to speak? Jeez. Oh, that pulled me out. Okay, all right. People. Okay, I need to get myself back together here. I could be like, hi, bitch, everyone. Every day we buy here. I say, yeah, and then we open it. I can't do that either. You want me to change? Jeez. Okay. Hi, people. This is very funny. I'm looking for New Zealand yen buy. It came down this morning. There was an election. The ruling party for a long time did not get any. Did not win by landslide, so now they need to find support from somewhere else that weakened the yen, and then yen strengthened, and now weakening yen again. Jeez. Deep NP. I'm trying to find my new voice. Sorry. Ahmed, yes, I am trying to stop, but I don't know what to do. Please help me. No, Ashton. No, it's hurtful sometimes. I'm human. I'm sorry. Okay. What I would like to see here, and across the board on the yens, is a lot of normality. And what is normality is this is normality. Okay. And what's currently happening is not normality. Whoops. And I'm looking for the long game. I think that yen pairs next week are gonna rise. Yen is gonna weaken next week. That might set up the dollar yen trade, which has been there for some time now. But I'm not confident that the short-term volatility is going to be in my favor. Meaning, if I buy now, am I gonna be stopped out there and then we go higher, kind of a thing? And I do a lot of back testing back to 26. I look back to 2016 a lot, and I don't like. Well, if you if you don't understand what I mean, which is next week, is that we can like dollar bearish and everything falls, but then you have this 4% move in 2016 and in 2020 we had another. Should we say what was it? That was that one. That was another 1% move, and the 1% move is it is what it is, but it's 121% that 121 pips that year. But later on, the volatility was about 250, and I don't have stop losses for that. So, my unprofessional opinion is that I believe if Trump wins, dollar's going to strengthen. If Kamala Harris wins, dollar's going to weaken. In either case, yen is going to weaken, and depending on gold dollar moves, gold is going to go opposite. Of course, if Trump wins, I think gold is going to go higher. I think that, yeah. So that kind of colors my view. The question, the problem is we have had quite a rise on gold, and why am I going so fast through it? Is because I'm showing my thought process. The process I want you guys to have as a trader is you look at something split second. I said New Zealand yen was range bound. I'm already over it. Okay, gold is strong, rising. It's going to continue that way for the longest time that I. Finding your voice is the first step to being successful in trading. Yeah. I forgot it's Halloween. That's why he's doing that voice. No, sir, I am not. I'm perfectly fine. But you guys know I don't have self-esteem on social media and on YouTube. Like, what do you mean? Like, you guys talking to me about my voice? Now, like, seriously, I seriously don't have so self-confidence, but it's trading I can do. So if you attack my character or my voice, I'll give you a reaction. I'm sorry, that's just me being human. Point being, gold is likely to go higher. That's what I want to, and I don't know how to get into it. It is difficult for me to get into it. It's kind of like putting your hands into like I don't know, an aluminium boiler where it's like it's 1,000 or 2,000 degrees Celsius, whatever that is, or into a nest of wasps. Like, I don't know. I feel like every time I try, I get hurt. So oil fell lower because Israel's response was not adequate, or according to people in the Knesset, or it wasn't strong as the market expected, so that oil fell. That means CAD fell probably also today. Great. Other than that, I am currently looking at higher highs on the Aussie dollar, higher highs on the euro dollar, higher high on New Zealand dollar, higher highs on pound dollar, but it currently hasn't happened for the past 1 month. And I'm looking for higher highs and higher lows on yen pairs, but I'm currently having a range. Euro yen, we have higher highs, but I don't like it. I didn't like maybe I should have taken that one on Thursday, but hey, too scared, two chickens because it's high. Same thing with pound yen. But again, we are not in the same situation. Every yen pairs at the moment, as I'm the yen man, has a different feel to it, and from now down to the bottom is still 153 pips. So I'm not interested in it. I think gold will go higher either way because historically spending is high in the first 100 days. Yeah. EU sells? No. Well, of course you can, but you're at the bottom, sir. So it can probably continue as well. But there, who was it? Olis again, you said buy or sell. Okay. I like your question, but you need to give me more than that. What I mean by that is, what is your analysis? I need to improve your analysis, not just your ability to ask questions. So, I say if we had moved more than 200 to 300 pips, we are probably due for a pullback. We have 440. For euro, that's a local pullback, that's a local pullback, that's a local pullback. But the pullbacks are deeper for every time it goes lower. And I'm not going to say that's bottom, but when it reaches a bottom, it accelerates and it goes a bit further and then it pulls back. So for me, everything tells me this is going to be probably around the bottom, but it can still continue lower if Trump wins. So at the moment, I would say if you're going to sell it, 110 together with Nick and 111 together with me is probably a much better sell area as of a structure more than trying to sell the bottom. As I said, Laura, oil happened because of Israel not attacking the nuclear and the oil fields or the oil production in Iran, and rather took the what was it? Military installations and some kind of air defense systems instead. Yeah, also streaming and trading is a very quick way to get wiped out of your account. Do you think US oil will recover from that gap? No. The thing is, Mark, is gap theories and me are not friends. And this is just based upon my experience for 10 years. Gap theories is only gap theories because retail traders is there. What do that mean by that? Is okay, let me do another story. How would I tell the oil story? I said around there, we're going to go lower. We're going to go higher than lower. And I said from here, we can potentially go lower. And it took a bit of time until here. Why was that the sell? And there's a gap and then just continue falling and we haven't covered it yet. The reason why is because we have a shock or a demand or a supply shock of some sorts. What does that mean? That means that we have an insufficient balance in the market, or said it with different things, is when a big brother takes away two of your toys, are you going to fight back? Are you going to fight back your two toys? Or if your girlfriend leaves you, is your girlfriend going to come back? It's kind of that situation, right? You do not have control. You don't have the upper hand. You don't control it. And when gap happens, it's because of an imbalance or lack of something. And in this case, it's a lack of buyers. Or in this case, lack of buyers. Probably also a bit of sellers. Why do they buy? Because their theory was that oil is going to go higher because Israel is going to attack Iran. It's going to drive the oil price in the oil price in the world because of added insecurities and issues and whatever. But what that doesn't happen, number two, it de-escalates. What are you going to do? Your premise of your trade is no longer there. Therefore, lack of buyers happens. And your question to yourself is, if they left the building there, will they buy again down there when the situation is exactly the same? Does it make sense? Yeah, I have a lot of girlfriends and boyfriends, not boyfriends. I have a lot of girlfriends and siblings that I do a lot of analogies with, and they probably they're getting a beating probably about every day because those people are mean. How to judge demand supply chain of VTI and oil? Is it a metric that tells us high demand, low supply? Thanks. There is many ways of determining demand and supply. One, the OPEC, the EIA, and the IMF posts demand forecasts for the next period. So you have a forecast and you have the actual usage previously. And then you have supply, then you have OPEC that says that they're going to supply this amount, and then you have the actual oil storage numbers from America. So you have actual number, you have what they say they're going to do, then we have what they actually did. And then in terms of demand, that's just me and you. Are we going to change much? Not really, but it's like a general trend increase in demand, unless you cut off, I don't know, everyone driving today, or everyone doesn't need anything today, or all the oil tankers crashes, and I don't know, maybe there's an outage of kind of systems. Unless there's an act of God or force majeure, then yeah, then demand, or sorry, demand mostly comes from China. So you look at China you look at China's demand and China's development economically generally, because China is like 30% of the oil market. That's how you can make up a sense and a feeling, one with concrete data and one with, well, it looks like what, to get a feel of how supply and demand works. But it's an expertise, not something learned in a day. You're welcome. Thank you very much for everything that makes absolutely perfect sense for you. So, for my trades going forward, I am not trading dollar yet, and I probably will never, but you never know. Pound yen, should have bought it back down there at 84, now at 98, 198. I believe this one is going to go higher. That doesn't mean I'm going to go ballistic and horrible into it, but I'll look for higher lows and higher highs and higher lows. We currently have that. I'll probably expect another higher low. Sorry, my thing is in the way. And maybe look for something like that or that, like that. So either this or that. But you will hear from me when I trade. So, but I'm very chill about it. I'm not needing to force anything out of it. And S&P 500 range should be lower. I think this was going to have a bit of a fun rally into Christmas. That's just an expectation. And if it goes lower, boo-hoo. It is too high for too long anyways. So every pullback, or almost every pullback, is a buying opportunity for me on S&P 500 and NASDAQ. And not DAX and the US 30, they're all in the same boat. This one is a bit lower. That would be great. So if it's lower like this, I would look for higher lows. Woohoo! Pound dollar, British pound, the US dollar, I'm looking for it to go higher, continue higher, and it's currently going lower. So I'm just waiting for it to turn around, to be honest with you. What's the take on yen pairs? It's going to go higher for longer. I don't think that the election is going to do anything about it. The inflation isn't hot enough, apparently. They're still looking at maybe potentially increasing interest rates. Speaking of said interest rates, the market is currently expecting them to maybe increase by 6 basis points, which is almost nothing. So most likely there's nothing going to happen with their interest rate in the next meeting. They're pricing in 34 basis points, which is 1.5 rate hikes next year. But I think that the more fun part is that Swiss National Bank is going to cut interest rates, and their interest rate is about 1.25, so they're going to go down to 1, where this one is 25. I mean, if they go up to 20, if they go up to 50, then there's a 50 basis point difference between those two, and that might lead to weakening in the Swiss and strengthening in the yen that we haven't seen for a very long time. But I don't think that Swiss is going to take over the funding part of Japan. But I think it's an interesting case that we might see some more weakness in the Swissy because of it. And I think that's going to be a very fun fall on the Swiss yen. But we're not seeing that currently because they're still too far away. So I'm just going to prepare you for maybe I should trade next year, maybe I should trade this year. I don't know. It depends on CPI. Evan, if US election DT, I don't know what the DT means, but wins, Donald Trump, okay, wins, you said dollar will gain strength. Will that be more possible situation for gold to cool a bit and give our entry point to go long again? Your thought, please. No. Because the question you have to ask yourself is what drives the strengthening in the dollar for Trump? As far as I can see, it is higher risk, at least, if not anything else, for trade wars, for higher inflation, for more risk. And I have seen he has talked about, I might not be 100% about it, but I've heard him talk about a lot leaving NATO. That is definitely sending risk higher. Is he gonna tackle Kim Jong-un again? Is he going to have scandals? Is he gonna have outbursts or theories that might not fit the current worldview, meaning pulling ship out of Middle East, pulling things up, and things becomes more war-ish because they pull out of areas. That is also a driver of gold. So those two are not exclusively pulling each other. They're both going to strengthen because of it. That's what I'm trying to say. And why is inflation going to rise? Because he has said he wants to do some economic incentives, and he probably wants to spend some money on the wall and to increase the, is it called the ICE? The immigration things that he wants to do. So there's going to be more government spending in those sections. So yeah, that's kind of, and then of course his tutoring is going to be an issue again. So that's why dollar is increasing, mostly because of higher inflation expectations, higher risk expectations, which is also driver of gold. And we also know what Trump does in presidency. So in a way, we know to expect uncertainty. It's kind of where I'm going to be on thoughts on that. But nothing wrong with Trump. Also, you do you, Trump. But it's not. He is not the most conservative. Not conservative. That's not the word. He's not the most silent president that America ever had. So it's going to be a lot of troubled waters going ahead. But who doesn't thrive in troubled waters, huh? So euro dollar, I need to go above 10840 by the end of the day. New Zealand to go above 60.40 or so. Euro New Zealand hit stop loss, and dollar CAD don't really have anything about it. I want weakness. My theory is weakness. I might be wrong. I've been wrong. I don't really care about it because that means I don't trade. That means that I'm just sticking to what I'm supposed to be doing anyways. Oil, lower. Gold, eventually higher. Swiss pairs are supposed to go higher, which dollar Swissy has, but CAD Swissy has not. Pound Swissy has not. Aussie Swissy has not, which is a bit weird. But regardless, I said Aussie yen should go higher, CAD yen should go high, Euro yen should go higher, Pound yen should go higher, New Zealand yen should go higher. I just haven't found a situation or an entry or something that speaks to me, and they try to fill the gap, but there is that. Is there any more questions I haven't looked up, by the way? Gold higher, pound higher. Lockdown G says he loves my voice. Thank you very much. Yeah, and of course Trump needs to spend on things that he loves and likes and should be. Someone says sounded like Mark Zuckerberg earlier. That's pretty funny. No, I don't have. I don't have any. Well, my theory is that it's just when we have excess money, BTC goes higher, and it's just another way of investing your stock money. It's just a lot more volatile, so it gives you more money, but it's the same driver as them. So I don't really care. Well, meaning I would rather do SPX500. It's less volatile. It's safer. It doesn't drop 50% of the value overnight, or in 3 days. So that's just structurally. And second of all, and more frankly of all, I am not. I'm not good at trading Bitcoin. I lost too much money. Anyways, as I said earlier, we had a fun meeting today with the VIP webinar people about how to win the election. I am probably going to come back again. It's election next week. I needed to be safe. I needed to be confident. I needed to be strong. I needed to be good in your trading, good in your strategy, or excellent, or excellent, or excellent. But if you are in some kind of mental state, some kind of mental issues in terms of you are not psychologically fine, or you need feedback on your trades, I am here to help you in Discord. I also have my own mentorship if you want to do that. Other than that, you can go sub to my YouTube channel. And until next time, boom. See you soon. Love you, family.
Oh, Chris Pulver took a trade in our Discord.
Oh, really? Let me see.
Pulver alerts are now available in the A1 Trading Discord. If you want access to everything Chris Pulver is trading, click the link down below, or click the link being dropped in the chat now to speak directly with a team member.
Hey everybody, how we doing? Let me go ahead and push the stream out, share my screen. Let's get cracking here. Happy Monday, nice to be with everybody. We have a busy week ahead. This is going to be a pretty wild week, but it'll be an exciting week. So let's see what we have here. Give me one moment. There we go. Okay, so just taking a look at the SPX this morning, things are pretty quiet. We had a gap higher, pretty calm. Going to the week itself, a lot of stuff to get ready for. This is a snapshot of earnings. We've got some notables. The big ones I'm looking for is really in the meat of the week being Tuesday, Wednesday, Thursday. We have Google, AMD, Snap, which I have some exposure in. Did a little buy. I actually just bought shares of Snap looking to see if we push higher. Let's see here. Some consumer ones. Pfizer, I've got some exposure on for Tuesday morning. McDonald's, which has a E. coli breakout. We might have an opportunity to buy McDonald's on a dip, maybe. Eli Lilly, big one on Wednesday. Caterpillar, kind of global economy and growth on Wednesday. That's before market open. Microsoft, Meta, Coinbase, probably some big volatility around all three of those. Robinhood, take it or leave it. Carvana's been on a tear. I'd like to see a pullback on Carvana if possible. Maybe with rates going slightly higher in financing, that might affect their stock price. I'm not sure. Starbucks, meh. And then Thursday, Apple and Amazon, the big ones. Intel, another legacy stock play. Legacy Tech, MasterCard on Thursday before market open. We've got Norwegian Cruise Line on Thursday. We have Royal Caribbean on Tuesday. And I'm not sure if Carnival's in there somewhere as well. Chipotle, Tuesday, I noticed that one. I once Chipotle did like a crazy split. I mean, I've got some ratio spreads on Chipotle where I'd take some shares of it. Otherwise, it's a busy week. We've got over 800 stocks, and then we got big energy on Friday with Chevron and ExxonMobil. So it should be enough to move the markets. And you just got to wonder, with 800 plus companies reporting earnings this week, are we also going to see a lot of direction, or are we going to see a lot of noise? Because what's happening next week? Okay, this week we have lots of earnings. So 800 plus companies reporting earnings. We also have US PCE this week. We have US GDP this week. Then we'll have our US non-farm this week. What else? We have the ADP numbers. We'll have unemployment claims. So that's a pretty big week. But you go into next week, we have the US election. US election, we have the Fed. So I think that it's nice to have cash at the ready. See if we have any good opportunities. I'll probably take a couple of stabs on some earnings, make it very risk defined. So if it's good, it's good. If it's bad, it's small. But I'll take a couple of stabs. I'm ready for like this to be the dust that's going to get kicked up that we have to navigate, and we will see how the dust is settling for us to make some decisions for the rest of the year. If all this is noise, and then the market actually catches some traction for the rest of the year, that's a lot easier than trying to get super aggressive in here and get beat up by a bunch of chop. Okay. Am I watching Ford? Yeah, I'm watching Ford. I've got some shares of Ford. Ford's at 11.23. I mean, I'm not sure what else there is to watch on Ford outside of buy a put to protect yourself if it tanks to the downside. Otherwise, we push up to the same range highs in the $13 to $14 zone. I do have some exposure. Actually, it's not a bad spot to look. Ford is aftermarket today, I'm assuming. Yep. So today's the 28th aftermarket. Hopefully this is inexpensive, but let me take a look here. So I have some, let's see, let's go this account. Ford, have 200 shares. Maybe buying something to be on the safe side. Ford earnings today after market close. Yep. All right. So if I went out to the options chain, bought one for Friday, if I buy a put, I could buy a $10 put. I mean, number one, we're only expecting about a 70-cent move to the downside, even with earnings and everything. And I can price this out, but if we have some big shock to the downside, I mean, if I buy a $10 put, it's $1.20 out of the money. But if this happens to be something that pushes down towards $10, I mean, I could turn just to be protective. I mean, if it goes up, great. I don't want to cap it necessarily. If it goes down and it costs me 8 cents to buy a put and price goes down towards $10, I could turn an 8-cent put into maybe a 30 to 40 cent credit. So I could lower my cost base. I think that's worth it. Okay. So I think I'll do that. I've got some shares here. I'm going to cover those shares with a put at $10. So I'll cover it there. Quantity 2, pay 8 cents for it. If something if it doesn't help me, it doesn't help me. If it does help me, then maybe I can turn it into like 30, 40 cents credit. That'll at least lower the cost basis a little bit, and I'll just sit on for a little bit longer. So 8 cents, see if I can get in here for 8 cents. Easy. That was 8 cents. Okay, so I've got a little protective play there. And then this account has 600 shares with no cover. So that's this one. Same thing. So 600 shares, no cover. And I'll go 10 and cover all for 8 cents. There. So Ford, just put some protection in. That's all. So this isn't a trade. This is a trade for me of already owning shares, but I'm not doing an earnings play on Ford. But basically what I have is I bought a 11. Oops, go text box here. So 11/1 expiration, $8 long put for 8 cents. And I'm just protecting all shares. So if we have a pop to the upside on Ford, $12, $13, $14, that'd be a huge surprise. This put is going to be worthless. It's not going to help me at all, but having the shares actually jump up would be good and helpful. What this is going to help me do is if this does drop and we hit this low or we go lower, it's just going to help me protect over the next 4 days for expiration. That's all it's for. Okay. The other ones I want to take a look at, Amazon. This one's out through earnings. I have a long put at 160. I think I might do the same thing here just to be safe. And Amazon, I've got quite a few plays on Amazon. So if I go look at the portfolio today, Amazon, and a lot of it is so far lower that I doubt any of this is going to be threatened. I mean, right now I'm up about $9,900 on Amazon without owning a single share. A lot of it's just been earnings, or I'm sorry, it's been option plays, ratio spreads, bull put spreads, all sorts of different, income strategies. But I do have a couple of accounts that do own Amazon, and I think in order to protect that, if needed, and let me check here, I know I'm protected out through the 1st. So let's go to this account, get logged in. There we go. Okay. So I own Amazon, and it is a 160 put for this Friday, a 210 covered call for the end of the year. Still up about $9,500 on that. I've given back some on the long put, but it was a necessary trade. I mean, if we have a push lower, I mean, 160 is way down here. So we'd have to have a huge miss on Amazon, but it's there in case I need it. And let me see actually what it looks like if I bought something now, because I bought that put quite a ways back. That would have been like in the summer. Let me see what maybe the 8th or the 15th looks like. It's less time. Let's see, so I could buy it for basically $100. I could protect all my shares, and that gives me a couple weeks if this continues to push any lower. So that's not too bad. I think I'm going to do that. I'm just going to spend the extra money on it. 160. I'll go out a little bit further. So I'm going to buy. I've got the 160 put that expires this Friday on Amazon. I'm covered up to 210. I still like Amazon longer term, but I want to get a put out a little bit longer because I don't know if that's going to pay me anything. If we drop, let's say the expected move is $14, we go from 190 down to 176. That might move my credit up a tiny bit, but it's not going to help a lot, especially on the 9 or the 11-1 expiration. I mean, this is essentially trading for 14 cents. It's almost worthless, I mean, my initial trade price on this was, I'm trying to look at my trade price. I guess I got into it for about $1. Now it's trading for 14 cents. So it is what it is. But I'm going to add another one. So I'm going to go the 11-15 expiration, 160. It's going to cost me a little bit of bucks. It's going to cost me about $100. I can justify that. So let's trade. Look at Amazon. Okay. So I'm buying a put, and I'm buying 2 contracts out to the 15th. The 160 cost me 55 or 56 cents. Good till canceled for 2, cost me $112. All right, review and send. Okay, filled. Okay, they just got filled. Cool. All right, so Amazon got filled for a bit more protection. If I look at the stock itself, let me see what I might take a couple stabs here. Look, we have earnings this week on a ton of stocks, including some of the Mag 7. If I was down here, I would say way more likely to do a bull call spread. I mean, I'm expecting to see earnings be relatively solid. So we had a revenue miss on Amazon here, and that obviously caused a big drop to the downside, but the market's stabilized and pulled back. Let me see what this is expecting to see here. So, I mean, we know Amazon makes a ton of money. 1.26 earnings per share to 148. So 1.138 earnings per share. That's a slight downward trend. Revenue going higher. EPS going higher. All right. So trend is still on its way. Expected growth. Let's go to Amazon. look at their analysis, go to their growth estimates, current quarter, current year, next 5 years. I mean, this is why I like Amazon long term. Their growth estimates just still look pretty solid. I mean, it's reducing, like current year at 63.1, next year at 22, but the year after that, 31.75%. It's just solid. I mean, Amazon is solid. I know there's competition. I mean, everyone's heard of Temu now because it's everyone's social media, maybe Shein or some other ones, but I still think Amazon is pretty solid. But that's me. So do I like it enough to take a trade on it? Well, let's find out. If I did a November 1st and I buy a 190, so I could spend $1.20 to get $1.35. I don't mind that trade if we go higher. Right? We're trading at 190. I have to buy the 190. If I put it one strike lower, it's going to be a bit more expensive. Right? That's about a 1-to-1. I risk 130 to make 120. But if we have any type of positive movement on Amazon, which earnings should be Thursday after market, that would essentially say if we go higher on Amazon, cool. So I mean, I'd like to see Amazon push higher. We need it to literally go up by about $2 to $3. The expected move is $12, $11 and change. Do I like that trade? I do. So here's what I'm going to do on Amazon. I like the trade enough that if we go higher, we'd make about $1.35, risking about $1.15. If it goes higher, good. We can close it out Friday. If it pushes higher, we can close it out for, it's a max 250. So if we close it out at 245, 240, similar to what we did on IBM and at UPS, it worked the same way. Okay. And I would do this on the trade. If I take the trade here and I just do one contract and it goes down, I'll probably take the same trade, go out to November or December or January and take a 2-contract trade and just see if it goes higher for a 2-contract trade. So this is more of just a little earnings play. All right. Can you buy simple option calls or puts on Tasty? Of course. You can go as basic and simple as you want. If I want to buy a call, though, this is the problem. Not the problem. I mean, this is just why I typically use defined risk strategies. If I buy the 190, it's going to cost me $600 per contract. And if I'm wrong, I lose all of that. If I lose on this contract, I'm losing $115 to $120. Not a big deal. If I went slightly in the money, I can make this even cheaper. 192 by 195, I pay $1 and I potentially make $1.45. What does price have to do? It has to go up about $5 or $6. And is it capable of going up? Well, I mean, expectation this week is that we go up by about $11. Or I should say we have a movement of about $11. So I'd like to see if I can get filled here for about $1.15. $1.15 debit. Let's see if I get filled. So $1.15. Let me see if I can finesse this a couple of cents. $1.18 still gives me a slight edge with a favorable reward to risk. Filled at $1.17. Okay. So I'm taking the trade for $1.17 on Amazon. And I'm keeping the risk small. Okay, so Amazon is in. I'll add this into my Pulver Alert section for the A1 Trading Discord. That's an update in the stock options trade section. Amazon, 11/1 expiration. So I'm risking $117 per contract to make $133 per contract. And earnings is Thursday, which is 10/31 after market hours. Okay, trades in for Amazon. It's bigger. Let me take a screenshot of this. All right, so that's that. I'll add those images in just a moment. What else do we have here? We have Microsoft this week. Microsoft, I already have this trade in, so I don't really need to play earnings when I can be longer term and see if Microsoft goes higher. So earnings itself, here's what I will say. If Microsoft dips on earnings, I'll probably put in a similar trade at different strikes and then still put out a November to December expiration. So I like Microsoft, but I already have some exposure in that one. Google, same thing. I already have exposure in this one. So Google is up as we come into earnings. I went out 12.20 and 117 expiration. So those go a little bit further out. Intel trading at 23, potential gap fill here. I mean, let me see what this one's going to cost. Intel's not too bad. Hopefully it's cheap. Intel has Thursday market earnings. If we go to the Friday one, it should be dirt cheap to take this trade. If I buy the 23 and sell the 23.50, it's a 1-to-1. Cost me 24 cents to take the trade. It's going to be at 25.25. So you're risking $25 to make $25 if it gets a decent push. It's only supposed to go up about $2, and you need it to go up about 50 cents. Well, I guess about 32 cents. So it's doable. If we have a disappointment on Intel, then it's going to be a small loss. If we have a gap fill, I mean, we did come back below these 2022 lows. We're coming back into these. I mean, this is crazy. This is a daily chart going back to 2015. Here was what's wild is COVID lows are right here, and Intel was way lower than that. So I know that some people love Intel and saying like, oh, it's such a good value. I mean, I look at their discounted cash flow model and their fair value is like a $4 stock. So I'm not that bullish on Intel, and they might be, a year or two away from getting this chip thing under control and giving some heated competition to Nvidia. So it's just a trade. If I like it, I mean, I could throw a few contracts on to see if it gets above. But would it be easier just to, I don't know. I guess if it was a cheaper trade, let me see if I went one strike further out. So if I went here, yeah, I don't really like that. I'd have to pay $22 to make 28. I have to pay 25 to make 25. If it was a bit more favorable for me to buy and see, I guess a cheaper debit, then I'd be more inclined to take the trade. Here's one on Snapchat. I do have some Snapchat exposure. Let me show you the positions here. So Snapchat, I do have some shares. I bought them around $11. They're not covered, but they are protected to the downside out to the 15th. So I'm looking to see on Snap, which is trading around 10.79. If earnings is positive on Snapchat in any way that gets us back into a gap fill or this little liquidity level and good structure level, there's two really aggressive gaps here. So we get to like $12.75, or we fill this gap up here just around $14. That is good enough for me just to take profit. I'm not looking to do anything crazy on Snapchat outside of if we have somewhat of a positive push coming back to these major lows we've seen for the last couple of years, and we have some resistance around $17. I mean, look, I'd love to see a big surprise on Snapchat to the upside, but this is a trade that I took, posted this in the Pulver Alert section. I bought the shares. I bought an $8 put to protect. If it pops up into 12 and change or 13 and change, I'm just taking the profit. What I might end up doing on this trade is if we see a decent push to the upside, what I might do is put in a deep in the money covered call as long as it helps me grab a few extra cents of profit. So case in point would be this. Let's say that price on Snapchat rips up to like $12.50. Well, rather than doing a $12.50 covered call in the shares that I have, I'll just look to see if my $12 covered call is paying me a premium on top of that. If the $11.50 premium or the $11.50 covered call pays a premium on top of that. So something where it's like the probabilities it should get called away at the strike price that I am going in the money with, I'll see if that's maybe my play. And it might not be a lot. I might be able to get like 10 to 15 cents of extra premium, but that in a 1,000 shares gives me an extra $150. It's worth it. That way, if it's going to get called away or if I'm going to close out the shares, I get a little parting gift to go with it. So Snapchat is one I want to watch. This is aftermarket tomorrow, I believe. Yep, aftermarket tomorrow. And let's see if we pop up and just have a range trade. All right, so let's see if we can head up towards like 1250 to 1350. Wishful thinking would be a $15 or $16. If we had a $15 to $16 price on Snap, I'd be stoked because that'd be like a $3,000 to $4,000 per account profit, which would be completely unexpected. So we'll see. But we've been in a pretty tight range here with 850 support, which is why I bought the 850 put. And that put was out to the 15th. Yep. So I got myself a little bit of time just in case this earnings report doesn't give me, profit on the downside, but instead I take profit on the upside. Whatever. That's my exposure on Snapchat. So that is what I'm watching. So for this week, I mean, let me go through the earnings plays here. Take a screenshot. So I do have some exposure. I want to look at McDonald's. I think McDonald's would be fair to look at since we had a dip. I'd like to look at PayPal. So I'm going to put a green box. Let me use a highlighter here. I'm going to put a green box on things I already have trades running. So let's see here. If this pops up on my screen, Ford, I have some exposure. SoFi, I have some exposure. PayPal, I'd like to look at. I'll make that one yellow. McDonald's, I'd like to look at. Pfizer, I have some exposure. Let's see here. JetBlue, I have some exposure. Google, I have some exposure. Snap, I have some exposure. Chipotle, I have some exposure. Visa, no trade. Reddit, no. Chubb, no. That's an insurance play. I think Chubb's been big in Berkshire Hathaway for a while. I think that's an insurance company. Let me look at that one. Eli Lilly, that's sitting near all-time highs. I might take a stab at that one. Let me see what other ones I have for exposure. Microsoft, I already have some exposure on. Meta, none. Coinbase, I have some exposure on. Uber, no. Altria, no. Actually, Altria, yes. I do have exposure on that one. MasterCard, no. Norwegian Cruise Lines, it's already up. I'd like to see dips and pullbacks on CCL or NCLH. Amazon, have some exposure. Apple, have some exposure. Intel, not going to trade it. Chevron, ExxonMobil, I'll look at those. So let's switch this to yellow and see if I can sprinkle in some more. So PayPal, I want to take a look at. McDonald's, I want to take a look at. RCL, maybe. Norwegian Cruise Lines, maybe. As far as placing a trade, that's what I mean. AMD, that's Advanced Micro Devices, that's the semiconductor space, maybe. Okay, and then, I mean, so if I'm going to get all these yellows here, so PayPal, McDonald's, Royal Caribbean, those would be trades that I'd have to get today, which, I mean, I have time to do it. Even if I don't get it done in this session where I'm with you live right here, I can still look at the trades and do it before the day is done. What else? Eli Lilly, willing to take a look on this one. Same thing on Caterpillar. What else? Robinhood, maybe. Meta, maybe. Uber, maybe. Peloton, probably not. Let's see here. Estee Lauder, maybe. I'm not sure how volatile it is. Intel, probably not. And then Chevron and ExxonMobil. Okay. Dominion Energy, Charter Communications. I'll put those as maybes. Okay. So, I mean, I could make this a very busy week in earnings. My goal is if I go active with earnings, I want to keep the trade size and the risk relatively small. There's no reason to throw a bunch of trades out here. I know there's earnings, right? And it's a coin flip. Sometimes it's up, sometimes it's down. But if I have a few winners, great. What it does tell me in green here is, though, I do have some exposure that I'm going to be watching my P&L pretty closely. I've got protection on most of these. SoFi, if we're at 52-week highs on SoFi, that's a good sign. If we have another positive, I mean, it's a positive earnings print. That could be a good thing to kind of push SoFi higher. That is one stock that I wouldn't mind getting rid of. I've held it for a while. It's positive on the year. I've been holding this thing. I mean, this is a stock that got migrated into this account, but I mean, I own SoFi in like the 7 and change, so I'm up a few bucks on it, which is fine. If we can get, I mean, 1126, we look left on SoFi's chart. Trading at 1127. I mean, it definitely has some momentum. I'm a little cautious of this resistance level right there. So if we hit it and we fade, like, well, that's just kind of a reset on SoFi. But if we are looking to push higher, I would be willing to let the stock go. I've said this now for the last couple of years. If we get back to this area right there with a spike, 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 and then a break, that's right around $14. I would be fine dumping the shares at $14, either issuing a deep in the money call for an extra premium or just letting the shares go because everything's uncovered. I guess to the downside, let me see what it's going to cost me if we have SoFi this week. It shouldn't cost me an arm and a leg to get the trade in. SoFi's earnings print is Tuesday before market open. So if we have a disappointing earnings on SoFi, I want to see if I can protect it. So let me see what else I have. I don't know if anybody else has SoFi with me. I think there's one other account that has SoFi. SoFi. That's it. I'm the only one. Okay, so SoFi, take a look. If I go out this Friday, I mean, the expected move is only $1. We're trading at 11.28. I could buy for $60. I could buy protection at the $10 put. Let me see what that's going to look like. So $10 put, we could get there. I mean, if we have a huge disappointment, I could turn a $10 put into some profit, and I don't mind sitting on the shares for protecting my downside. I think that's worth the risk. You know, I sacrifice $60, but if we go up, for every dollar that we go up, I'm making $300. So it's okay to protect, you know, for 22 cents out to this Friday. I'll go ahead and do that. So I'll go 10 and I'll buy, I'm going to cover all my shares. Yep. All right. So for $66, I'm going to protect my 300 shares. Just in case. Okay. And that way, if it goes up, same thing. I can either just take the profit on a nice little pop to the upside. For every dollar, I make $300. You know, sacrifice that $66. That's no big deal. But if we go down, at least I'm protected. Where maybe my 22-cent debit can turn into whatever. Let's say 40, 50, 60 cents. I mean, I'll make a few bucks on the put. I'll lower my cost basis by 30, 40, 50 cents, and I'll just sit on the stock a little bit longer. Okay, so that's SoFi. What else? Oh, let's look at Meta. Meta is sitting at 576. Is it possible for Meta to go down? Yeah, anything's possible. Okay, we haven't had really a lot of pullbacks here. I mean, is it possible to go lower? Yeah. Is it possible to go higher? Yeah. I mean, Netflix broke all-time highs, right? So I think for this one, I already have a ratio spread. I have an income trade. This is a 1-1-1. I'm willing to own the shares at a discount. So if we have a big miss on Meta, I'm watching. I'm willing to take on some shares. If we have a big burst to the upside, let me see what this would cost. It's going to be probably a $2.50 to $5 spread, I would think. The strikes are going to be about $2.50 to $5 apart. So if I went out, Meta is on Wednesday, Thursday. Meta is Wednesday after close. So Wednesday after close, if we went up, let's see what it's going to cost me one way or the other. So if I go Friday, if I buy and sell, so it costs me, it's just over a 1-to-1 reward to risk. So I pay 117, get 133 if I go for a bull call spread. I'd be buying the put, or I'm sorry, buying the call at 577.50 and then selling a call against that. I get $1.32 a profit if I'm going to risk $1.18. On the put side, I wonder what this looks like on the put side. If I buy the 575, sell the 572, same, $1.25. Fudge. I really wish it was back here. So I want to be lower to take that bullish trade. We're not, but it doesn't mean that we can't go higher. You know, I mean, we could have this week. We pulled back to the 21. We're just shy of the 50 period. Let's see. I might be better off just waiting on Meta versus calling a direction right now. If we have a big miss, then I'll get in and take the same type of trade, or just do credit spreads, or wait for this 1-on-1 to play out. But I guess if we were like in this area, how we pulled back, I just want to see if we can kind of pull back first, and then I'll get long. So I think I'm going to say no to Meta for right now. So do I like it? Not really. I've had some good profits on Meta with earnings. Microsoft I already have. Coinbase I already have. Let's look at Eli Lilly. This one I actually might be willing to take a trade on. Ah, fudge! It already pulled back a little bit. So from these recent highs, 8%. I don't know what's necessarily going to drive Eli Lilly lower outside of just some heavy amounts of profit taking. But if it was sitting at the highs, I'd be more likely to say, hey, let's take a bear call or a bear put spread, right? But we've already had a bit of a dip lower. I mean, this doesn't take much to go boop right back to the highs. I mean, I'd rather short it at the high as opposed to like, if it's pulling back here, I want to be buying this thing. You know, I mean, this was a big stretch from the August 5th sell-off. We come into just more chop, more chop, more chop. I mean, I'd rather be long and see if we establish a range versus calling the top. Say, so I don't know. I'm gonna talk myself out of some because obviously I don't need to trade everything this week. Caterpillar. Let's take a look at this. CAT. Now this one, I could see, depends on the spreads. I could see a trade to the downside. The top is around $400. I mean, the stock has seemingly done pretty well since 2022. I mean, it's been in a pretty healthy trend, but up, pulls back, up, pulls back, up, pulls back, up again. If it's due for a pullback, I'm going to take a look at that one. Let me look at Caterpillar. CAT. So this one might not be, I don't want to go out necessarily super, super far, but I want this to be something within the next couple of weeks. If we hit the highs around 400, maybe I do this. Maybe I look at instead of an at the money, I'll get a little creative on this one. If I went out to the 15th and I do an at the money, so if I buy the 390 and I sell the 387, holy shnikes. Okay, I mean, this is almost like a no-brainer. I'm only paying 75 cents on the debit to get a $1.70 in profit. Now, granted, price has to go lower, but that's not a bad trade. Now, what I'd like to do is if I move this up to 400, is something like that. So is it possible for, all right, I think it's worth maybe looking at this trade here. If I pay 85 to 90 cents on the dollar, I'm risking $95 a contract to make $150 a contract. That's a pretty good reward to risk. Now, we obviously have to see price go lower and pull back. There's some gaps to fill in here. I think what I'm going to try to do is get this trade in. I'm going to take the price up higher. So if we get a 400, I'm going to buy the 400 put and then sell the 397.50. I'm going to get that for $1, which means my profit is $1.50. But I'm going to let price go up to that level before I sell it. Okay. So let me take a look at this one. The 390 by 387.50, that's not too. Now, wait a minute. That just jumped up by about 40 cents. Well, that's not as enticing as I thought. So let me do this. I'm going to try to get this trade here for $1. Let me try to get $1 debit. Now, this one may not fill. I might be asking too much out of this one. But if I get filled for $1, I'm looking to have a $150 profit for $100 risk. Price gets to go up a little bit higher to hit these same highs around 403 and then see if that's a rejection. So if we pop up here, hit resistance, and then fade, that's the trade I'm going to take on Caterpillar. So 400 by 397.50 out to the 15th. I'll take the trade pending at $1. Okay, so this one is a pending order. Right now it's trading for $1.28. So I need price to go up a little bit higher for me. So get these all listed. And then team, let me know if I got a bounce at the top of the hour. Okay, so just getting my trades in. Should have all these pending orders ready to go. 1, 2, 3, 4, 5, 6, 7, 8. Yep. Okay, in. So that's a pending order. I'll add the screenshots of this one. This is CAT 1115 expiration 400. Okay, so all-time highs around 403.75. Looking to fade all-time highs with a cheap debit spread. So $1 max risk per contract and 150 max profit per contract. All right, so those are in the Pulver Alert section for A1 Trading Discord. By the way, I saw it got posted earlier. Give everyone a chance to register for a webinar that we're doing on the 12th in the morning. Nick and I will be doing a webinar to talk about our remaining plays for 2024, our big projections and forecast for 2025. This gets us through earnings week like this. This gets us through the election, the Fed, where the bond markets are doing. If we have yields up and bonds down or vice versa, we'll see what happens with these cuts coming for November, December. But that's going to be a lot of fun. That's November 12th. I think we're going to have there's the form popping up in the chat right now. So that is an invite only. So that's not a webinar you're just going to see on the live channel. You have to register for that webinar session. Okay. All right. So 400 by 397.50 pending. Right there. Okay. I will get in some other trades if I like them. I'll post them in the alert section in Discord later today if I like anything. There's still plenty of time. I mean, I don't have to force all these trades, but I will be going through and chipping away like, okay, do I like PayPal? Do I like McDonald's? How about Royal Caribbean, AMD, some of these yellow ones? I said I'm going to sit on this one. I'm putting the trade in on Caterpillar. I'll sit on that one for right now, but I've got some checking to do. So there's going to be a couple other trades likely sprinkled in to my alert section. And then let's check some top-down stuff. Right now, market still is pretty quiet on the day. It's in fact very quiet on the day. Which is as expected. I mean, we have a calm day for Monday as the market just kind of slowly churning. We have a lot of earnings to come, so the market's likely going to create some gap higher, gap lower. We'll see what overall earnings consensus is. SPY sitting near the all-time highs, not quite there. I do have some hedges going out for the next couple weeks to see if the market turns. If Mag 7 disappoints in any way, okay, if Mag 7 disappoints in any way, it has enough market cap and enough clout to drag these markets lower. Now, that's a big if. I mean, obviously Mag 7's been like this beloved group for a while. It started out as Fang T-Man, then became the Magnificent 7 to the, Elite 3 or whatever the heck people are calling them. But these stocks are pretty much cornerstone stocks, hallmark stocks. They're bellwethers. They're making a ton of money. But it just depends on, are they making enough money? How greedy is Wall Street now to be like, you guys aren't growing fast enough, so we're going to push your stock lower. All right. Nasdaq had a bit of an outperformance last week, still not at all-time highs, but looking better. We do have some semiconductor plays this week. Tesla was probably a big contributor to that last week. Look at the Dow. The Dow had a pretty nasty week. Last week was a big fat red candle on the Dow. But I kind of like where it's at just for the sake that we have a 50 to 100 period. If we get a pullback like that, I'm kind of liking that again, like the deeper pullback or the slingshot like we had back in August. So I'll be watching the Dow. Russell, same type of thing. Russell's up on the day, which is kind of nice to see. Do we break some recent highs? We'll find out. Do we pull back deeper into these moving averages? It's pretty well supported, right? It's pretty well supported. So if we pull back, I'm still looking to buy some dips on Russell. If we go to dollar, Dollar starting to get a little bit choppier here near the highs. So this is a good spot to be watching for. If this pauses, okay, does the dollar end up showing some weakness? Does the dollar show some strength? I don't know, but that's something to watch. The dollar could set us up for this is the swing. You know, I thought we would do a little bit better job of rejecting in this area that I have the yellow box on, and it didn't. So I'm waiting to see what happens. But if this pauses, look for some noise in here. But if we end up making some clean breaks, you know, risk appetite towards the end of the year, dollar weakness makes some sense to me. So I want to keep watching the dollar from that standpoint. Oil, I'm not touching this oil stuff. I think that we are putting so much pressure on this floor that if this floor breaks, you know, the positive thing is inflation goes down if oil breaks the lows. The downside is we've got conflict, geopolitical tensions, war, all this stuff could happen. If oil gets too cheap, it's only the US and Saudi Arabia that make money. Everyone else is going to hate lower prices. Now, we might love lower inflation, but it's I don't know. There's just so many potential um, consequences with like super low cheap oil prices when we don't really have an alternative. You know, everyone's talking about nuclear energy and going back to, you know, uranium and there's shortage of supplies, but we're a long ways from making that like a full adoption. I mean, I feel like solar and wind, it's slowly adopted, but certain areas, utility companies make it impossible to do it. I mean, I've got a friend that lives in California that has solar on his cabin, and basically he couldn't justify it. I mean, looking at like a 10-year, it take you like 10 to 15 years to recoup what you put into it, and then you know, I don't know. It hasn't taken alternative energy hasn't taken the same way. So I think it's inevitably going to have to happen. But right now, it's like oil, I think makes me a little bit nervous at the floors that we could just break it. So I'm not trying to call bottoms, even though it's well supported. Risk defined is fine, but I'm not calling bottoms here. Same thing on CL. And that's part of the reason I stayed out of the trade is because I made a lot of profit on oil just trading CL because it's, you know, futures contract. So I'm, you know, risking maybe $500 a contract to make like $600, $700, $800 a contract, which works out favorably. But if this floor breaks, I mean, that's an easy avoidance. So I'm just going to stay out of it for right now. Gold and silver, and then I'll wrap things up here in just a few minutes. Gold is at 27.42. We're just off all-time highs. You know, I'm still waiting here. Like, if the market keeps going higher on gold, I'll just watch the portfolio melt up with the position that I'm in. I'm not adding aggressively at these highs. I want to see a dip. I want to see a dip. I want to see a pullback. That's it, man. That's it. It's that simple. If I'm going to add more to my gold position, it's not at all-time highs. It's that simple. So if we have a pullback, I'm going to add. If we don't, I'm going to watch it melt up and I'm going to watch my portfolio go higher with the position I've already established. You know, I was long in gold way back here. So I don't need to be greedy sitting here at all-time highs hoping it goes higher. I had gold in here, I added, and it's just been watching positions just pay out. So I don't need to be crazy. I want to see a dip or a pullback. Okay, silver, same thing. I want to see a dip or a pullback. If I don't get one, well, I measured my profit up here. I've got ownership of SLV. I've got some futures contracts as well. If I hit my measured move, I'll take some profit. It's not that hard. So I want to add to both gold and silver. Silver is probably a better space because I think this is where we ultimately get towards like $46 or $47. So if I can add on dips here and this continues and continues and continues, then silver to me has more measurable upside than gold. Gold is just at all-time highs and it's going to continue to be momentum. But silver at least has a technical measured move to 36 and 46 that I can, you know, play on the chart, which is why I'm in it. Okay. All right. Bitcoin 68.6. We're back up in the same little choppy zone. Watching it, you know, let's see what happens. If it breaks higher, watching this area on Bitcoin. So nice little push up. If this is a bull flag, you know, bulls are going to have to make another fresh break above 69 or 70,000. Do we get back to 74? Do we break 74? 74K, if we get above it, everyone's going to start talking about 100K. You know, it'd be an awesome way to cap off the year. If we had a move towards 100,000 on Bitcoin, that'd be awesome. Okay, if we don't, then we don't. But we'll see what price gives us. I mean, I'm again, same thing. It's like all the exposure and accumulation in here. If it goes up to 100K, great. Am I adding at these highs? No. If we have pullbacks towards like 60 or 52, I'll probably add some additional exposure on Bitcoin. Ethereum, is it going to follow suit at all? It's a long ways from 28.15 right now, but that's where I want it to be. Copper, staying out of this for right now. Nikkei, big rip on Nikkei today, but still, really choppy after that fall from July to August. DAX is off all-time highs. FTSE still sideways. HSI is up 0.65 today. Let's see these other stocks. HSI, so BABA, decent little candle on the move, stabilizing around that 50% zone. Baidu, big pullback towards the 786. Let's see what happens if this one stabilizes. That's part of the reason my P&L is up so much today. I'm showing 31.5 in P&L on the day. That's good. That's a new fresh high for the portfolio. But a lot of that's attributed to just to come back in China. I'm still not out of profit. That's a floating P&L. So, but if China gets back into near these highs we saw back in early October, then I'll likely be looking to protect and take some profit. FXI, some credit spreads in here. KWeb, I don't know. It's showing this is good. This is not a bad sign to see green in China. 41.64. I could get this called away this week. Let's see what it is right now. JD. I've got a covered call at 42. It's trading at 41.61. This is out to this Friday. If I make this trade a winner, I'm going to get this called away for like $1.18 or so, I believe. Let me double check that. So check my break even on JD. It should be like $1 something. $1.18 per share. So if I make $1.18, it should be like $600. Yep, $590. So let's see. I want to look at this really quickly. So there are my shares. That's 1, 2, 3. So this account, JD. So I have the shares. I've got the cover call at 42. Then I have some income plays, which are going to be mostly in profit. Those are a ways out. Let's see here. Let's go 42. If I roll this, I just want to do a quick roll. Right now, if I roll it out by a week, I get another 90 cents credit. So I can keep the strike price the same. If I roll it down, I get $1.15. So I lose out on 50 cents, but I make 65 cents and I lower my cost basis. I think I'm okay just letting it get called away. I'll think about this. I could do a roll. I mean, this gets me another $500 or $600. So what I would be doing here, so if I do this covered call and I roll it out by a week, I get 92 cents. So if I've got 92 cents at 500 shares, that's increasing my profit potential by about $500. Now, obviously that's good. But if JD doesn't cooperate and it goes down, I mean, my goal should be lowering my cost basis overall. So let me let that marinate for the morning. I'll think about whether or not I want to roll it because I'm going out farther if I do. So we'll see what happens. I don't mind it getting called away this week, and I can always get back in if I like it. Okay, EQIX. Is this Equifax? Equinix. What is this? It's a REIT. Not bad. World's digital infrastructure. Okay. What do they do? I mean, all-time highs I don't love. Pushing higher with their earnings today. Earnings tomorrow or earnings Wednesday. Is this Wednesday morning? Wednesday after market close. Let me take a look at it. This actually might be a decent play. Let me go EQ. Okay, well, number one, they have monthly expirations, so that's not great. And they also have $10 wide strikes. That's not great. So to me, that one's untradeable. I'm not taking a trade on that. Even if I put this trade in, let me delete this leg. If I bought the 920 and sold the 910, I mean, I'm paying $575 to get $425. No thanks. So it's just the monthly expirations. It's too much time, and the spreads or the strikes are $10 wide. I'm not trading that. If it was a weekly expiration with a $1.50 to $2, then I would take the trade and look to see if we gap fill at these highs. But I'm not taking a $10 wide. That's silly. All right, CLLT or CTLT. Catalent. No idea. Pharmaceuticals. Okay. I mean, double bottom I see back here in late 2023. CTLT. Doesn't look great. It's cheap. It's overvalued. I'd say no. Best opportunity would be if we came back into these lows. Boop. Maybe it never happens. But yeah, I mean, based on this, I'm not touching that thing. It's trading at $60 is fair value, discounted cash flow at $11. No thanks. A $2,000 stock. What do you want to do with this? I mean, you can always dollar cost average something you like. Retail trade, internet retail. What does this company do? MELI. I mean, it looks pretty good. Snowflake wise, checks a lot of boxes. That's good. See price to earnings, price to sales. Price to earnings a little rich. 5.7% undervalued. There's still some growth there, but it is way higher than its peers. Wow. Price to earnings is way higher than its peers. Alibaba, JD. I mean, if that's competitors, whew, if it's competing against like Alibaba and JD.com, I'd rather trade those and take my chances on dirt cheap. I mean, China's been beat down into the dirt for the last couple of years. Pretty much post COVID, it's been uninvestable. So if I just think there's more upside potential on, percentage wise, JD, Alibaba, I'll take my chances on those versus getting into a $2,000 stock. All right, last one, and I'm gonna wrap things up. Now we get back to looking at some Fiverr. Oh boy, I know some Fiverr. All my little gig economy guys and gals, some graphic designers. Let's have a look at it. I mean, it looks good. A little high on the price to earnings, but I like that. Has some runway for fair market value with discounted cash flow. Wow, that's crazy. Pure average 18.4, price to earnings is 67.2. I mean, it looks like it's dirt cheap based on the technicals, but it's not. Huh. That's pretty crazy. I mean, something about it, like they haven't monetized it well enough, but I mean, there's upside potential. I just don't like it is way more expensive on a price to earnings side compared to its peers. But fair value is up there. I don't know. I mean, if you like it and you're willing to take the risk, then maybe a call option, maybe an out of the money call option. I mean, who knows, right? But I would pay like less than $1,000 if I'm going to take a risk on something. Pay less than $1,000. See if it can pay you 2, 3, 4, 5 times that. Maybe that's the swing you want to take. But I don't think it's going to be liquid enough for like really aggressive plays inside this chop. More than likely. Okay, DJT, I'm not touching that stock. I was actually asking earlier, like it just seems like a total conflict of interest to have a sitting president that's got himself tied to a stock that has been, completely volatile since he took office or left office. So I don't know. I'm not touching DJT. Spirit Airlines. What is it? Free? No. What's Spirit Airlines? Save. Up to $3. So I looked at this trade with everybody a couple weeks ago. If you followed along here, that would have been a winning trade. You buy the shares, you sell the 250, you walk away with 38 cents per contract. That would have been an expiration for last week. I mean, again, it's a bit of a long shot. I mean, probably not my favorite airline to trade. I still have some exposure on JetBlue. Delta's been a better one. United Airlines actually might overtake Delta as one of the more profitable airlines, but I mean, it's inexpensive enough. Like, can we get to $3 up to $5? If so, I wouldn't hang on to Spirit that long. I would say if we get $1 or $2 of gain, I would be out of it. So I don't like it that much, to be honest. So I do have exposure in, I have UAL, okay, which has been on an absolute rip since this low in August. It's crazy. Delta has benefited from the same thing. You look at AAL, American Airlines, same type of rally. I've got some cash secured puts down here at $8, which are looking pretty good for full profit. And then JetBlue, the little engine that could, we're trading up to 745. I'm looking to see if this one has a squeeze up into some good structure in the teens. But it's if you like Spirit Airlines, it's more of the, do you get a little push of momentum to get you another $1 or $2, and I'd be out of it. I'm not looking to hold that thing now. Gold buy now, no. Gold, I want pullbacks. Okay, all right, everybody. I'm gonna let you go. I got to jump into another session at 11:30. So look for some more alerts and updates coming later on today. It was really all about earnings. I'll be cost effective. I'm not doing anything crazy to pour out a bunch of capital, but try to pick some good earnings plays. See what happens. Okay, sounds good. And two things you see in the chat. If you want my alerts, you want my trades, you can sign up. If you want to join that webinar with Nick and I on the 12th, sign up for that webinar. And we got a lot of stuff to discuss. And let's finish this week, next week. Like, these are two extremely important weeks. If we can get through this without doing anything stupid, then we should hopefully find some clear direction by the end of the year. Good, bad, and different. Whether it's up or down, we'll figure it out. But we give ourselves, the freedom to just let price do what it's going to do. I think it's going to be very interruptive this week and next week. And after the dust settles, then we can start making some decisions and hopefully see some clean direction by the end of the year. Okay, I'll let you go. Thanks, everybody. See you tomorrow.
Thank you for watching today's A1 Trading Show. Make sure to subscribe and to turn on post notifications so you don't miss the next one. We're looking for more guests to come on the show. If you're comfortable being on camera, have trading experience, and you're looking to grow your audience exposure, we'd love to have you on. You can fill out an application with the link in the description below. That's all for today. Trade safe, and we'll see you tomorrow.